What's up, guys? I just wanted to get out my quick initial reaction to Symbotic's earnings, get my initial thoughts out, maybe do something more in depth later in the week. So Symbotic stock, they just reported earnings. They had a big crash right after the market closed. Here is everything investors need to know about the earnings call, and trying to figure out why the stock is down 18% after hours right now. I mean, I thought the report was really good, just more everything moving in the right direction, it seems. So let's get into it. So they reported earnings today. Stock dumped 20% right after the market close. I thought the report itself was excellent. The quarterly numbers came in at the high end of what the company itself projected. I just put some of the initial main numbers right here in the chart. And, as you can see, for Q1 24, they had guided for $350 to $370 million of revenue. They came in at the high end of that, $369 million of revenue, good for 80% revenue growth year over year. I mean, what more do you want here? And then they even, for the next quarter, they projected even more revenue, 400 to 420 million, which would be a record quarter. As far as we go back here, yep, definitely a record quarter. That would be greater than 50% revenue growth year over year. Okay, so that all sounds great. They completed 3 systems in the quarter. So revenue grew 80% year over year. It was up from 206 million in the same quarter a year ago. They completed 3 new system deployments in the quarter, as opposed to the 2 they completed last quarter, Q4. They started 5 new deployments in the quarter, as opposed to the 4 they started in the fourth quarter of 2023. So everything seems to be proceeding very smoothly here. Adjusted EBITDA, as much as I hate this fake metric, $14 million, again, at the high end of what they projected, between 11 to 14 million. Next quarter, they're projecting 12 to 15 million. Their adjusted EBITDA rate continues to improve, went up to 3.8% from around 3.4%. Their net loss was drastically down. Only lost $13 million. Last quarter, it was $45 million, and that number has been trending down greatly over time. If we go back to Q1 23, they were losing $68 million was their net loss, so getting closer and closer to profitability. And their cash increased quite a bit, up to $677 million for cash and cash equivalents, up from $548 million last quarter. They still have this massive $23 billion backlog. Everything seems great. I really don't get what the problem is here, but we'll see what happens if it reverses tomorrow in the coming weeks. It's funny, the stock here, I was looking earlier in the week, I was looking to get in. Usually the stock pops after earnings. It looks like, Wall Street decided to run it up 22% leading up to earnings, I guess, and dump it on the earnings call this time around. It was getting too predictable, I guess. So anyway, Symbotic, this automation technology leader, they built a full warehouse automation system in record time this quarter. They completed it in 20 months. And they remain focused on improving their deployment speeds. They reiterated their long-term vision of, having a 12-month cycle or less. Some other key takeaway, we got some great information on the Symbots and all the advancements they've had there. So, there were really 4 parts to this. The Symbot is equipped with the newest NVIDIA chips, and this opened up all these new market possibilities really by granting the robots vision, so they can now see boxes that they were not able to in the past. And they can handle, a vastly increased universe of products now. The original bot, which was called X, could not process a tote or a paper box, but the Symbot can. And compared with competitors, they said a lot of the competition just uses trays really, whereas Symbotic has a greater ability to handle packages of various sizes, different shapes. This is all according to management, what they said on the call. They can pick and place packages 10 seconds faster, so they continue to improve. It seems like a very innovative company. And they're now able to handle more than 1 box at a time on outbound, whereas before they could only do that with inbound. So on outbound, it was only 1 box being able to process at any given time. So they continue to innovate. Some other key things, one of their big projects they keep talking about is BreakPack, which has a target market of businesses like drugstores, smaller stores, And management believes there's a huge opportunity with this customer base. Again, the company so far has really just worked with big, huge big box retailers like Walmart. Uh, so apparently the proof of concept for BreakPack was already contributing to revenue, which is what I believe the CFO said. But now it's ready for general availability, and it may contribute to revenue by the end of this year. And the delay is only due to the nature of the sales cycle. So a few other major updates, and then I'll just kind of give you guys my closing thoughts. So we heard about Greenbox, their joint venture with SoftBank. We've discussed this extensively in the past, which enables them to greatly expand their addressable market by enabling them to work with smaller companies. That's receiving a lot of interest apparently, and it's expected to recognize its first revenue this year. Their customer base is becoming more diverse. So, made a video about their partnership with Southern Glazers, Wine and Spirits. Of the 37 deployments that we highlighted here that they're currently working on, 37 deployments in progress, that is spread out amongst 6 different customers out of their total of 9 customers. And one critique of the company has longstanding been that they're too heavily reliant on a handful of customers, mainly Walmart. But they do. They're definitely starting to serve a more diverse, expanded customer base here. The value of the order backlog remains around $23 billion, which will ensure that they have a steady stream of income for the foreseeable future. And here you see a bunch of their customers listed: Walmart, Target, on and on. I'll let you guys read those. What else? Their recurring revenue streams grew 5% sequentially and 45% year over year. And management said to expect accelerating recurring revenue growth in the second quarter. So I think this is one of the most exciting prospects for the company, as over time, this recurring revenue is going to make up a bigger chunk of total revenue, and it's going to bring high margins with it. Management stated that over time, we can expect recurring gross margins to reach over 60%. So that'll be huge. I mean, they're going to be a money printing cash cow. And their gross margin increased to 20%, and it's expected to continue to improve each year. So in closing, I really don't understand what happened here with the stock. I mean, we'll see where it actually ends up opening tomorrow, but right now down around 20%, fell off a cliff. Very unlike this stock. Every earnings you could see here, it tends to go up after the earnings. So we'll see what happens the next couple weeks. I think this was a great report. Management clearly demonstrated a long-term focus on the call, which I love to see. For example, when they were asked, about margins, they stated how they don't want to do anything that would just save a few points on margins in the short term if it would have a negative impact long term, aka, sensible business decisions. And they also said long-term profitability will start to improve in the second half of this year. Additionally, they said investors should not expect new deployments to keep increasing at a steady rate as they have been, but instead to trend up over time as they start to focus more on delivering against the current backlog. So again, you could kind of see here how, each quarter these deployments have kind of been going up by 1 or 2 each quarter. A couple quarters ago, it was 1 system completed, then 2, then this quarter was 3. And then with the new deployment started, they went from 6 to 4 to 5. So this will probably not continue to increase short term, again, as they focus on that massive backlog. But the trend of 1 to 2 new big customers each year, they expect that will continue, and they're going to expand into this additional opportunity here with Greenbox should start to bear fruit in 2024 and 2025. CEO Rick Cohen, I think he's a true visionary. Let me go back here. CEO Rick Cohen, you can see him in that little picture here. I think he's a true visionary in very Jeff Bezos-esque fashion. He constantly loves to talk about having braggingly happy customers. So I'm really not panicking about the short-term market reaction. I like this stock for the long term. I think it's a winner. I think warehouse automation is only beginning, and this is not going anywhere. It's the need for this is going to increase as e-commerce really blows up, and the desire to work these factory jobs probably decreases. So let me know what you guys think. Look forward to hearing your thoughts on Symbotic in the comments below. If you enjoyed the video, don't forget to like and subscribe. This is Vinny from the Investment Club. I'll see you guys next time.